Welcome back. Well, let's head straight to the markets now. We have Will with the details. It's been a while seeing you on this side.
It's always good to be on this side.
Yeah, and this is the week, the trading week.
The trading week before Christmas. It's a special week.
Week is very important. The profits that you make this week
will determine how you spend Christmas.
How dirty your December will be.
It's very correct, Ladia.
That's Christmas.
Yes, you were talking with your guest about, you talked about understanding, you talked about data, the security data or security data that, our subnationals, that the government, local governments have to understand to be able to drive this growth or change, within this level or in this level. But I'm just hoping that they're not going to be confused. Or the data or the numbers will not confuse them. Right. They will actually understand the numbers.
No, there's no confusion there.
Be able to do
it's
this
straightforward,
thing. It's straightforward, right? So let's kick off with the performance of African markets at intraday. We see major stock markets that we track were mostly positive at intraday. Nigeria's NGX. It was still bouncing off Friday's positive close. Last week, Friday, it regained the 99K level. Today, we're seeing it regaining the 100K level at intraday, up 0.63%. As at the time I took the numbers, we're going to be checking with our analysts to see if that changed. But South Africa, let's look, markets there are closed today for a national holiday, a day of reconciliation. Let's hope we reconcile in this world. Now, elsewhere, we see Egypt's NGX also in positive territory at intraday. Let's look at those numbers, and then we see Kenya's stock market closing Friday's session in negative territory. But let's look at some outlook for the week, some financial data to look out for. We see DMO is targeting today. A 120 billion naira auction is taking place today. MBS is releasing the data, which he has released today. We see those numbers coming out at 4.6%. Now, US Fed, the BOE, the Bank of England, and the Bank of Japan are holding rate meeting this week. Now, let's see those numbers there. We see that's what we're talking about. The DMO is targeting, but this has been released, so it's just been like an updated version. As we've seen in November inflation data at 34.6 from 33.88% that we saw for October. Now, the US Fed, the Bank of England, and the Bank of Japan are expected to hold rates in their decision meeting for this week. A lot of market reaction to that. We're seeing some markets closing in the red. But let's see how that goes. We're going to be talking to our analyst. He's going to be giving us more data on that. We're seeing also T-bills markets, subdued liquidity in that, but I think Ambrose Omodion is going to be speaking to that. Ambrose Omodion is the Chief Research Officer, Invest Data Consulting. He's going to be sharing more on that. Ambrose, it's good to have you on the program. Good afternoon.
Good afternoon. Thanks for having me.
Yes, we're seeing that investors are predicting, some are predicting a choppy week for equities, but we're seeing it regaining the 100K level, and also it's a week before Christmas, very important. And so this is a start. Is this a start of the anticipated Santa rally, or is this just a fluke?
Yeah, for me, Santa Claus is underway already as we speak, because looking at the what we call it, the positive market breadth or expanding breadth, shows that investors are already taking a point of correction to position for the year end. And that has started already. Don't forget that in the issue of market, for the past 26 years, market in Nigeria closed in green in 18 years and red in 8 years. As a result of all this Santa Claus rally, each year that comes with the end of the year seasonality. For me, it's not surprising we are seeing the market in this direction. And also, what is very important is that if you are seeing a market that is on the uptrend, what is your own take as a investor or trader? It's the time for you to know whether you have bought in the right time to take profit. And for that, as we enter the new year, we want to see what a little oscillation as before we start seeing the unaudited account results for January 2026. But one thing that is very clear here that the market telling that the inflation that just came that was released recently or today shows you that those in equity are having an edge over those in fixed income market. No matter how Jewish the fixed income market look like as we speak now, because of trading be around 26. One, I can see that inflation have hit 35% for the month of November. Says that no matter what you are ending, you are already in negative return. No matter how use the result, like I said earlier. But for those in equity that are able to edge against inflation with their stock, the LG index, as we speak now, is almost slightly below the inflation. But still, the individual stock that return more than that, even triple of that of inflation. So that is where it should be. And being that between the month of December and that of April, if we will see a lot of activity in the market, already volume of that institutional investors are really coming back to the market, as shown in the volume and also expanding market spread. It puts a good sign that investors are pushing well for this earnings season that are peak in Nigeria that comes between February and March. That is where most companies on the exchange reward investors. For me, this is not time to panic, rather take advantage of what we call stupid data, that the month of December is already a favorable month in the Nigerian market. For the past 20 years, up in 18 years, it tells you that there is something that goes for the month of December. That means every investor or trader should take advantage of this period and the next 2 months to enter the new year to make what they have lost in the previous month. Really, market are correct for almost 2 months before we are seeing this kind of move in the month of December. For me, it's a good move for the market. There's no need for panicking, but rather invest what intelligently.
But we know that when inflation data is out and we see that uptrend in inflation, it usually affects the real sector, because, the CBN is definitely going to hike interest rates. It's going to stay on that orthodox method of hiking rate. We've not found an alternative yet in terms of the fiscal, plans to help to mitigate this. But what are you seeing for the real sector, especially now that inflation is still climbing and the markets, we look at, the average man on the streets, prices are galloping. So what do you see for the real sector?
Yeah, actually, before now I said that solving inflation problem in Nigeria is not just a hiking rate. I think that this figure that came now also a pointer to the CBN or monetary policy to know that they should also look outside of hiking rate. Because even when there's scarcity of money in Nigeria today, we are seeing that inflation is see. I tell you that it is not because of too much liquidity in the system. But they claim that yes, the money outside the bank are more than the one inside the bank. That for me is not enough for us to keep having a rate hike at the expense of our economy. I'll tell you, the more we're going to increase rate, the more we're going to push a lot of private business out of business. Because what? Because of cost of fund is high. It's for me for them to look at all those structures, all those structural issues that are affecting our inflation, especially insecurity, and the pressure they should look at. And also, hiking rates also another way of kind of importing inflation to the economy. For me, this exchange rate is also a problem. That's why we're seeing a little stability in recent days. What high cost of inflation is also important in our inflation. For me, I believe that the monetary policy committee should also look at not hiking rates to solve our inflation problem, but rather let's see how we can address some issue that from the fiscal authority, maybe that will have a stable board. For me, like I said earlier, for those that are in equity, an advantage because when there is high interest, higher inflation, most companies that are into essential goods can equally push their cost toward inflation to the consumer. Which at the end of the day, they post a better number and pay a better dividend to their shareholder. That also support their price to go up. That is the board. On the general, I'll tell you that inflation is not good for both fixed income, not good for both stock market, or also for the Nigerian citizen. But another way you can say that for those that are in a fixed market, can take advantage, because if companies are going to push their cost to their consumers and make better earnings, pay better dividend, price goes up, it's a plus for them. But I think that our regulators, or what we call the economic managers, also sit down and look at not hiking rate. Already you are mentioning in this program that we are seeing some climate where they are already cutting rate. Last time, ECB cut rate. Yes, why all eyes are on what the Fed is going to do, either today or next week. Also, I'm telling you, this is the thing that you want to do. You need to be dynamic in your management of the economy, because the more you want to either attract foreign investors to Nigeria because of high interest rate, you are pushing all those local businesses into what? Into that, out of the business. For me, this is a way to manage that, because without Nigeria economy, foreign investors will not come in.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for your perspective. We'll be looking forward to see if the government, they're listening, everyone's listening. I hope that we make the right decisions in terms of policy direction for Nigeria. Thank you so much for your time on Business Incorporated. Let's head to other markets now, the Middle East, and let's see how they fared in today's trading session at intraday. Most markets were in the green except for Tadawul, that's in Saudi Arabia. We see Dubai massively up 4.24%. We will be checking in to see what's driving that. Abu Dhabi up 0.09% at intraday. And let's see, within the region, we mentioned Saudi is the only downer at intraday. It was down 0.04%. And we see the Qatari index trading up at intraday. Let's look at markets in Asia. It started the week mostly in the red today, reversing earlier gains as investors turned their focus to key central bank decisions that's expected later this week. Now, the Fed, that's the U.S. Fed interest rate decision due on December 19th, is a major event for all markets. Now, in Asia, the Bank of Japan is also expected to hold rates, as I mentioned earlier. It's supposed to hold it as it announced the results on Thursday. Japan's Nikkei, we see that reaction there, 0.03%. Knee-jerk reaction. People were just, reacting to that, and it's dipping to about 39 39,457 points. Kospi in South Korea, we see also that dip 0.22%. The economic data is really influencing investor sentiment. We see the Hang Seng Index in China down 0.88%. That's nearly 1%. And we see that China is expected to, release some economic data, and, people are reacting to that. Home prices are going to be affected based on some, adjustments going to be made there. We see Shanghai, that's in mainland China, down 0.16%, and the Nifty 50 in India is also down 0.44%. Now, stock futures, let's look at the U.S. markets now. It was calm on early trade today, with the Dow Jones riding a 7-day losing streak into a week highlighted by a key central bank meeting, which we're expecting on December the 18th. Now, futures tied to the Dow Jones average ticked up 0.11%. We see at 44,385 points. S&P 500 futures up 0.17%, and the Nasdaq futures also up 0.3% in early trade. Investors are on the edge because the central banks are making their moves this week. Decisions from I mentioned the Bank of Japan, Bank of China, and the Federal Reserve as the U.S. are set to set the tone for markets into the new year. And Ladi, I'm just going to mention this one now because I know you're an Apple fan. Yeah, we just use coming in from the markets. Apple is trying to get into the foldable smartphone, market. I think they've been left behind. After many years of just minor updates, we know that Apple just changes the case, and then the next thing is a new
maybe
iPhone.
Adds a few camera lenses.
Yes, lenses, and then it becomes the new iPhone, know. But right now, they're trying to break, the old ways and come into the new, into the light.
Right, the foldables. The foldables are nice.
Yes.
They look good. They look sleek.
So what's your take on it? Because I know you're an Apple fan. So what do you think is going to be? How do you think markets, buyers, consumers are going to I guess,
a couple of lovers, of iPhone and iPhone fans, they've been waiting for that, upgrade for the longest time. And, this might be it. We're not sure yet, but, at this point, there's reports that they're looking at exploring, those foldables. But who knows? We'll just have to, wait and see at this moment. But I'll definitely love to see, foldable. But when you check the cost of these phones, when they come into Nigeria, prices are not playing.
It's not playing, and that's the problem. We're just hoping that Nigerians can afford it.
Hopefully. Thank you so much,
No worries.
Will, for giving us the details there.